Hi, I'm Larry Gaines. Here at PowerCycleTrading.com, I share what I've learned from my 3+ decade career trading securities professionally. And in this video, I'm going to show you how to spot stock breakout patterns. Now, the first place to start is to incorporate moving averages into your trading. So, all different trading platforms will provide you these moving averages that you can utilize. And the moving averages that I like to follow are going to be I'll show you the ones I like to use. This is the 8 exponential moving average. So I like to use a red line to show the shorter time frame, and then I use a dashed line like this to show that it's exponential, meaning that it's weighed more towards the current price. Okay, so I like to use this 8 exponential moving average, the 21 period moving average right there, so the dashed yellow, and then I like to use what we call the simple moving averages. I like the 50s, very, very important. So here's a 50 simple moving average, and then a 100-day moving average, or 100 period, a 150 period, and a 200 period. So this being a daily chart, this would be a 50 simple moving average, 100 period moving average, or 100-day moving average, 150, 200. So when you're looking at trading, you want to look at the daily time frame if you're looking for kind of a longer term, what we call swing trade, a trade that can last 1 or 2 days to 2-3 weeks. Now you can see this is an example of Home Depot. So you can see how it was beautiful trend to the upside. See where it broke out right here. So we'll go through some breakout patterns, but see the tops right here? Now this is what you want to look for. See that how it spiked up here, pulled back to the moving average of 21, pulled all the way back here to the 50 simple, very key moving average, but it held. Now then it bounced off that. Now here's where you want to go and enter your long. See that break of that top right there? That's a perfect entry right there. All right, so a lot of times you'll get that explosive breakout from a prior high. So it was prior high, comes back down, retraces into the 50, comes up, fails the first time up, pulls back, and then breaks. So never go for the first break. So right here, never go for that first one. See how it pulls back and then take it. You never know exactly how far it will go, but that's where you're going to use Fibonacci. So here it moves all the way up, and then it just has this big sell-off to the downside. Comes back up to the 50, 21, fails at all these moving averages. So what I want to show you next is another kind of setup here, so you can see how it's just tracking below that 21 period moving average, and we're getting a little bit of retrace. The other thing you can do then is start to put in trend lines. All right, so here is that spike high, here's a spike high, so we connect those 2 points. Now we have a trend line that comes across. Now what we're looking for is a break of that trend line. All right, so you see that? Now you get that first time up, you fade it. You don't try to go with the breakout because it fails. Usually it's going to fail the first time. Second time, third time it failed, then it starts chopping around. But look, it's holding the moving averages. Now the other key thing you want to look at is your moving averages. So here's that 50 simple moving average, and now you can see these other moving averages crossing. Price crosses first and the other moving averages are crossing. So that's also a good pattern to look for a kind of what we call a stock breakout pattern. Now then you can see it explodes up, and you had a really great move from 180 all the way up to 187, pulls back down, holds the moving averages again, and then takes its next leg to the upside. All right, so that's a good look there for an example for Home Depot. Now what I'm going to show you next is the other thing to incorporate is sometimes trading tools can really help you on this. So I'm going to show you the chart with just these simple moving averages, trend lines. Now I'm going to also put on some indicators that we use called they're momentum based indicators. So I want to show you the difference in what this looks like. It's a very visual, more visual breakout kind of indicators that you can incorporate. So let's take a look with these indicators overlaid on this chart. Now here's Home Depot again, and you can see the pull down, price goes down lower. I've got that same trend line in here. But on this chart, you're seeing some indicators. So these are momentum-based indicators, which help you to define the momentum of price. Okay, so they're just going to define momentum. So I use 2 different ones. So when I start getting this histogram going above 0 here, this is what I call cycle 1, 2, then you can see that price momentum starting to gain some positive momentum. And a lot of times that'll tell you direction. So here's that same chart with the trend line, but it just gives you a little bit more visual indication to potential direction based on momentum. All right, so that's another little nice feature tool that you can incorporate, momentum-based indicators. Here's another example of using cycles. Okay, so here's the stock square, SQ. Now you can just kind of look how the market price action cycles up and down. Okay, so look at this cycle and look at the moving averages. So you can see in this situation it moves up and then it breaks the moving averages, moves hard down, but right it comes into that 50 simple moving average again. So nice solid support. Then it backs back up, retrace back up. Now, what I like to look for then is like these tops. See that prior high right there, those tops? That's where you want to start establishing a trend line or some kind of horizontal breakout line. So it'll really help you to identify a good breakout spot. So we've got these two highs right there. So just come in and use your drawing tool like this and connect those points, to give you kind of an established breakout trend line. Now you'll see that price starts breaking, and that's where you can take an entry to see if you can get a bigger flush to the upside and see then how powerful this movement was. And this is the other beautiful thing, how it really separates and pushes up way extended from the moving averages. But as long as it's above those moving averages, you just stay with the trade. And you can see here it just tracks that 8 exponential moving average. So again, another really nice breakout trend pattern, breaking a trend line, holding moving averages. Now we're going to overlay some momentum indicators, and you'll see just how much more clear and defined this actually is to help you to define that directional breakout, either up or down. Now here's square again, and I just put on 2 momentum indicators down below on the studies below. Now the histogram, you can see here, it shows you momentum right here goes below 0, so the momentum faded. Now here we have square, and see how it pulls back into that 50 moving average. So we've got those 2 prior highs, and we're looking for a potential break of that high, but the momentum will tell us directionally where that potential breakout point might be and when it's going to happen. So if you just look at this chart, so see my cycle 1 and 2 are starting to go positive, so it's gaining a little bit of price momentum there, and then finally it comes back up here and retraces, and it hits it again, a little bit of another test. It's kind of like breaking a tree limb, chop, 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 and then you can see momentum is getting better, and then boom, you've got something maybe to start for a bigger breakout. So all these little things help, if you can spot these types of breakout patterns where you have a pullback into. I like to look at that 50 simple moving average on the daily if you're trading longer term time frames, and then look for breakout points. Now always fade the first 1 or 2 times up, and then look for that 3rd or 4th break, and try to apply some momentum. If you do have momentum indicators or some type of way to measure momentum, try to add that to your charts as well. Now here is one more example. Here's another breakout pattern. This is on Skyworks, SWKS. So if you look back, you want to look back at past price action. So if you look here, you can see Skyworks sold off real hard, came back up, and so you can see all that price activity there. Now, what you're seeing here is if you look at this chart on Skyworks, you can see that it broke down below all these major moving averages. So it's, we call this kind of a broken chart pattern. So here's your 200 period moving average, here's a cluster of the 150, 100, and here's that really important 50 simple moving average, and your 21 and 8. So see how it broke that cluster, and then it could never regain any price above that. So this is a broken down downtrending pattern. So what you want to be looking for is to go in the direction of the trend, which is down, and you want to look to pick your entry. So we want to look here at these lows to look at taking a potential short trade based on a break of those lows. So you can just look here, see where it broke the low here and it started to pull down. So pull down here, but here, see that spike low right there? When you see that candle pattern here where it has that spike low and holds, see where it's holding over in here? And then you've got that wick, there's potential for it to retrace back up. So look what happens. Sure enough, it retraces up. But then what you want to be looking for is is it going to have enough momentum to get back through these moving averages, or is it going to fail? And we call this a retracement failure if it does, and that's where you want to start looking to reshort it. So what you can do here is then start establishing your trend lines again. So see how it comes up here to the 21 period, and then it starts to fade again. So here's where you want to start establishing a trend line, looking for potential break of this area here in that prior swing low. So start putting in your trend lines, so we could draw a simple trend line from right here on these lows, put those in, and it'll really help you to define a breakout point. Okay, so we're going to define that with trend lines from these lows here, just looking at that breakout point there, and we want to look at that point down there. So let's take a look. So you can see how it broke. Okay, you never know how far it's going to go, and then boom. So now we're going to put into this chart, those momentum indicators, and you can see it gives you a little bit more validity as far as showing you the momentum to the downside, which gives you validation to the weakness. So here you can see, here's Skyworks just chopping along, but it's below the moving averages, so the trend is down. So we want to look for short trade setups. Now, momentum here, cycle 1, starts to shift up. So you just wait it out. Just watch that momentum right there. I'm not going to do anything until I start seeing negative momentum on both my indicators. Now you can start seeing that negative momentum, cycle 1 and 2. So this could turn into something bigger. So this gives you that validation of potential weakness. And then there's the trend line break on that pattern. Okay, so the trend line break here on that pattern comes here, spikes back up. So what you want to do now is watch for that retracement failure into this 21 period moving average. Now you can see the momentum indicators went up, and now they start failing again. And this gives you the other opportunity to get into the trade right there at that break. So, it's those little things. The main thing, follow your moving averages. When you've got your price action below your major moving averages, you're in a downtrend. When you have price action above those major moving averages, you're in an uptrend. So that's one of the best things that you can do for your trading. So here you can see, just for example, Skyworks is back above all these moving averages, so it's got a trend up, and then finally fails and gives up. So I hope this helps, and this is a place to start off with your moving averages and trend lines to look for those very detailed breaking points. Now, one more thing, at powercycletrading.com I've put together a number of free toolkits with some really great important information for trading these types of directional breakout type patterns, as well as options. So make sure that you go to our homepage at powercycletrading.com and get a free ebook on the various toolkits that we have on directional trading and options. So I hope this helps, and I look forward to working with you in the future.